Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, looking at the biotech sector, XBI, LABD, IBB, VRX, and CLVS. So starting with XBI, we had a 3-day pullback, and on Thursday we saw the bulls buy the dip right off the middle Bollinger Band support, and saw a nice level form there. And then again on Friday, we saw the bulls buy the dip again, and they closed up closer to the high of the day. But what stands out on Friday is that bull volume, because the candlestick, you can see the open was pretty much right near the low, and the close was up near the high. So that tells us that the majority of that volume is favoring the bulls, and that's obviously a good sign, considering it's more than any of the bear volume on that pullback. So the middle Bollinger Band holding 2 days in a row. The bulls are trying to fend off this bearish TCG cross of the 4-period exponential moving average over the 8-period to the downside, which would indicate some downside risk. But we do have an inside candlestick here on Friday where the range of 66.30 to the high of 67.42. We're going to be watching for a break of that inside candlestick on Monday to indicate short-term direction for that day. And we'll see if the bulls can confirm this reversal candlestick, establish this level of 66.26, the low of that pullback, as our higher low on this uptrend, and looking to resume back towards the upside. And it does depend on what the S&P 500 does. Obviously, the bulls want to see that S&P 500 remain strong, and we did close very strong up near the all-time high, so odds are looking pretty good for some continuation, at least to start on Monday. The weekly time frame for XBI did break the high of 2016, and now it's pulling back a little. So after 4 green weeks in a row, it's no big red flags for the bulls. Normal healthy consolidation, bigger candlestick than the bulls would have liked to have seen, but again, still making headway with their higher low and higher high pattern. So LABD is just one lower high and lower low after another because the biotech sector is holding up pretty well. So we did have a bounce here, lasted just a few days, a bearish reversal candlestick, rejecting from the middle Bollinger Band resistance, and you can see that there are some short-term opportunities to be had in LABD, but we just need to keep in mind that it definitely is counter trend, so those bounces are anticipated to be short-lived, just like this one last week was at this point. The weekly time frame is a bullish reversal candlestick. At the bottom, these are all-time lows, so because of the time decay here in LABD being a leveraged 3 times ETF, it's definitely weighing to the downside, and we're seeing new all-time lows. So we need another green week to confirm this bullish reversal candlestick, but this trend, in order to reverse it, we pretty much need to see the bulls make almost a 50-60% move in order to just break the first lower high. So definitely in a bearish downtrend. IBB is a bit weaker than XBI overall, but it's very similar. And you can see that big bullish candlestick, nice spike in volume. We're holding that middle Bollinger Band without even testing it. Same thing with the inside candlestick, lower wick with bulls buying the dip on Thursday. The weekly time frame, however, is weaker because we have not broken the high of 2016 yet. That high was up at 301.61, and we just got up to 296.93. So that's a pretty important difference because this is a lower high at this point, and if we were to pull back, we still have a lower high pattern in the long term, whereas XBI breaking that high of 2016, we've been in a nice uptrend since February and seeing continuation. VRX, I still like VRX. We're reaching an equilibrium right now with higher lows and lower highs where we had our breakout, our high of the breakout, our low of consolidation, lower high, and the bulls are looking to form a higher low now. So support on VRX right now is the low of the past 2 days, 610, 615, the low of Wednesday, or make that Tuesday, was 1613. So all right around that same range. Bulls definitely trying to build a base of support there, but we did close fairly close to the low of the day, so it's not convincing that that level is going to hold on Monday. It does look like we're going to test that level again. But we have our higher low, lower high being formed. On the weekly time frame, we've rejected twice now from this middle Bollinger Band. That's going to drop down next week in the 1640s, and you can see that the range is very small here. We have an inside candlestick on the weekly time frame to be watching as well. If we turn this middle Bollinger Band into support, we're looking at the recent high here of 1755 in a downtrend of lower highs and lower lows. If the bulls can get above 1755, we then have a short-term higher low and higher high, and we're going to be looking at the bulls trying to change that longer-term trend back towards the upside. CLVS has been a really strong biotech bull, but it gave a really clear bearish signal this week, and it was another one that was reaching an equilibrium pattern where we have our bull break, our high, low of consolidation, lower high, higher low, lower high, and then we broke the higher low pattern. As soon as 6081 right here broke, that was a big move to the downside, and it was a clear bearish break from a very strong uptrend that we had seen. So the weekly time frame is now consolidating a bit more significantly. We have the 200-week moving average support at 53.27, but after such strength, consolidation certainly should be expected, and that break of 60.81 was the clear bear signal, and you can see the increasing bear volume on the way down of that pullback. So the biotech sector bulls, XBI looking good, trying to hold that middle Bollinger Band ideally, and looking for the S&P 500 to see strength and continuation. Certainly helps the bull environment for XBI. So I appreciate you watching. We'll check back in. Have a great rest of your weekend.